What is up, guys? Happy Monday to you. Hope you guys are doing well today. If this is the first time on the channel, go ahead and hit that subscribe button. Also hit that notification bell that lets you know every single time I upload a new video. Let us jump right into the markets for today. Bitcoin is struggling to get above 8,900. That is a heavy point of resistance going all the way back almost a month to the end of March. The bulls haven't been able to get us over this hump. For the last few days, we've been trading above the 50-day moving average. Something that we fell below towards the beginning of March, really all the way going back all the way to January, where we had that crash. We've been trading below the 50-day moving average, barring 1 week, around 1 week in March, where we did fall below again for, over a month, and now we're back over it. So that is a good sign, even though that 8,900 is still a strong point of resistance that we are not able to climb over, and the bulls are not able to take us to the promised land. RSI, there's still some room to grow on the RSI as well as the MACD, so they are looking bullish, or on the bullish side. The VIX fix, this indicator right here is supposed to mimic the VIX, which is a volatility indicator on the traditional markets. This is pretty good at finding the bottoms and the highs of current prices. So when the VIX fix is towards the bottom, it usually has an inverse relationship with the price, meaning that the price is at its current resistance point. So this is also confirming that 8,900, which is where we're at currently, is a point of resistance. And it doesn't look like, based on this indicator, it doesn't look like we are going to break above this anytime soon. This is obviously just one indicator. We do look for a confluence of indicators before making a solid or educated projection as to the direction of Bitcoin's trend. Looking at these shorts, this is actually really interesting because it looks like the short sellers are currently in limbo, not really knowing what to do with regards to Bitcoin's price as it currently stands. A few days ago, I did a video on this, but a few days ago, short sellers were almost 100% confident that Bitcoin was nearing its catastrophic end. That this is the point where Bitcoin does crash to $1,000 or $4,000 or whatever the predicted bottom was at the time by those who love to catastrophize about Bitcoin's price. But at around 6,800, the short contracts were almost at an all-time high, meaning people thought, or short sellers thought, that Bitcoin was going to go down further significantly from that point. Obviously, they got burned. Bitcoin went all the way up to almost 9K, which is where we're at currently. And now the short sellers, the short contracts, haven't really increased or decreased since that point, meaning there isn't really any indication to them what this means for Bitcoin's price. They don't know if we're going to go, if the bulls are going to break past 9K, or if we're going to be seeing a decline from this strong resistance point. So they are in limbo just as much as us. Those who are long on Bitcoin are also in limbo, not knowing which direction Bitcoin will break out. Zooming out real quick, let's take a look at a higher level view of Bitcoin. This is the 1 week chart of Bitcoin. There is a bullish candlestick pattern forming here. You'll see that these three candles, these are called three white soldiers. It definitely harkens back to a time when that term was more relevant than now. No, the reason it's called that is because, there was a time when these charts were black and white, and the red was actually black and the green was white. So that's why they're called three white soldiers, and not because of any sort of racial connotation. But this right here, along with other indicators, can signal a trend reversal, and in this case would be a bullish trend reversal coming down from a bearish trend or a downtrend that we've seen really since January of this year. So this right here is a really bullish sign. It doesn't mean that we're on the path to some sort of parabolic run that will take us to 20K from this point. I mean, we might eventually get to 20K at some point in the future, but it doesn't necessarily mean that because the last time we saw three white soldiers, let's just call them three green soldiers. Because the last time we saw three green soldiers was on this run up to 20K. It just means that we are on the verge of a possible trend reversal coming down from this downtrend. If you'd like to know more about candlestick patterns, there is a great Investopedia article that describes bullish patterns. I can leave that in the description, but you'll see here the three white soldiers as an example on this chart, and there is a quick explanation as to what it means and how to trade within that. Moving on to Ethereum. Ethereum is a really interesting use case. Ethereum, if you remember, December, January, even February, through the crashes towards the beginning of the year, Ethereum was like the last of the Mohicans, sustaining itself through the most violent crashes, and growing or maintaining at a level that other cryptos, even Bitcoin, were not able to sustain. And that's why you heard of the flippening, where Ethereum was going to overtake Bitcoin. The crypto community was so sure of it because of the way that Ethereum was holding its own throughout some of these anomalous crashes that we had towards the beginning of 2018. And then March came along, and Ethereum sort of became the forgotten crypto, right? Like the redheaded stepchild. There were reasons for this. I even did a video on it where, Ethereum basically became, or was seen, I guess, as just a platform with which ICO funds were raised, and there so many ICO projects had a ton of Ethereum that they can dump on the market at any point that they wanted. And some traders and investors were really focusing on that above what was really beloved about Ethereum, or what was to be lauded about Ethereum. However, we knew that would be a temporary sentiment, and as the market rallied and Bitcoin rallied and it pulled the rest of the alts behind it, that Ethereum would see the light of day again. And ever since around April 7th, it's been on this violent uptrend that it hasn't seen in a while. And you do see this rounding bottom pattern forming, possibly a cup and handle. We don't know. It might even just shoot past these resistance levels where the beginning of the rounding bottom was formed, and climb, back to old levels again. So currently Ethereum is trading at around $638. It passed the 0.5 Fibonacci level on its way to the 0.618 level, which is seen as usually, a deciding moment. If it breaks past there, Ethereum could continue to see a rally. If that is a point of resistance, then it could be in a consolidation pattern for a while, or even dip back down. I think that it looks like Ethereum is definitely on an uptrend that might consolidate sideways for a bit, in the same way that it did here back around April 12th. It consolidated for a few days, then rallied again, consolidated for a few days, then rallied again. It might continue on that path as long as the market doesn't crash, barring a market crash. Ethereum will continue on that path, I believe, until it sees this heavy resistance that it saw towards the beginning of March at around the 1 Fibonacci level, which is $870. And then it will be a deciding point from there as to the direction of Ethereum. Zooming out again, looking at the 1 week chart, you do see that three green soldiers pattern forming. This looks almost identical to Bitcoin's 1 week chart, right? If we go back and look at Bitcoin's 1 week chart, if you remove the title from this chart, you really wouldn't know what chart you were looking at, because they do look very, very, very similar. So here's Bitcoin's 1 week chart, and here's Ethereum's 1 week chart. So zooming out again, it gives you a different perspective that you might not otherwise see if you're just looking at a shorter increment. Lastly, I want to talk about an altcoin that I sent out a trade alert for. This is Bitcoin Private. If you're not familiar with the trade alerts, they are issued on the Discord. The Discord is 100% free. To get the trade alerts, you need to sign up to the Patreon, and you'll also get the weekly report. So Bitcoin Private is another Bitcoin fork, and the reason that these are really, I guess, the risky, but they're also opportunistic trades, is because we don't really have, once they hit the market, we don't really have an idea of where they should be priced or what the market sees as its price. And so there, if you go off of previous Bitcoin forks, there was a certain point in time once they hit the market where you could have purchased them and held them, and you would have seen massive profits. Bitcoin Cash being the obvious extreme case, but we've also seen that with Bitcoin Diamond and Bitcoin Gold. There was a certain point after they hit the market, you do see the traditional dip after it hits the market, and this is where Bitcoin private hit the market, took this extreme dip. And then there's always a certain point, whether it's a few weeks or a few days after or a few months after, where you can buy that Bitcoin fork and see massive profits. Now, I don't want to get into a moral discussion or, an idealistic discussion about, the different Bitcoin forks. That aside, I'm only in it for trading. So I'm just talking about it from a trading perspective. I'm not saying that I love Bitcoin Cash or I hate Bitcoin Cash. If it will make me money, I'll include it in my portfolio at some point. You do see this rounding bottom pattern forming like you see in a lot of other cryptos currently. I hate trading Bitcoin private because I can't get a decent chart for it. It's not currently on TradingView or Coinigy, and the Trade Satoshi chart is just absolutely terrible. If you look at, I'll pull it up here in a second. This is the type of chart that you get on Trade Satoshi, and I can't get any of these zooms to really work consistently. It's absolutely terrible. So you might as well look at this on like World Coin Index as I have here, or on CoinMarketCap. But you're not going to get any of the great tools that you get on TradingView. So until Bitcoin private hits an exchange. Oh, and that's the other thing is once it, currently, if you look at the exchanges that it's traded on, let me just pull up markets. You'll see that it's traded on Trade Satoshi, Nanex, X-Rates or X-Rates, however you say this, X-Rates, I guess, Trade Ogre, Barter Dex. I mean, besides Trade Satoshi, I never really heard of most of these exchanges, but it's currently not on Binance or Bittrex or Bitfinex. We expect that as soon as it hits a reputable exchange or one of the big exchanges, that you might, see this price rally. And not to mention the Bitcoin private that we also received from the Bitcoin/Z Classic fork. There's that as well. So now, again, there really isn't a precedence or a historical context as to what the normalized price of Bitcoin private should be, but there's a certain level of risk that I'm willing to expose my portfolio to, and I do that in order to possibly generate greater returns, but it is a managed risk. I know what the percentage of my portfolio that I'm willing to expose to these sorts of risks is. All right, a couple of closing out points. I will be attending the Blockchain Connect conference in Silicon Valley. It's in San Jose, to be more specific. That is June 26th and 27th of this year. If you want to go, I will leave a link in the description of this video and all videos going forward. You will get 20% off of your tickets using that link. And if enough of you people contact me and tell me that, you're going to go to the conference, then I might actually organize a meetup. That would be awesome. I would love to meet some of you guys, those of you who are going to come out there. We can grab some food and some drinks, talk about crypto, talk about the conference, talk about things that aren't related to crypto, and just hang out. So yeah, let me know if you're attending, and I'll definitely try to organize a meetup to accommodate. Lastly, I'm working on my site currently, and I will have an updated portfolio section. This is what a lot of you guys would probably be interested in, since I get this question more than most questions, but this will be updated in real time based on what my current portfolio holdings are. Obviously, I'm going to leave the amounts aside, but it will give you a percentage of what I currently hold in my portfolio, and will give you an idea for how I do my portfolio distribution and how much risk I'm willing to expose my portfolio to. So I will leave a link when, maybe not in this video, but in the next few videos, when the site is ready. But yeah, I just thought that you guys might find value in this, since I get this question a lot. All right, guys, that is it for the video. Go ahead and leave a comment, leave a thumbs up, subscribe to the channel, hit that notification bell. Let me know if you're going to the Blockchain Connect conference in Silicon Valley in June. Subscribe to the Patreon for the weekly report and the trade alerts. Join the Discord. It's 100% free. Stay safe out there. Peace.